This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to the Avoiding the Crowd podcast. I'm your producer, Robert Kraft, on behalf of the SNN.Network. And joining us, as always, is our host, Maj Soueidan. It's look, we took a while. We need to get a lot prepared for you today. We got a pretty cool episode ready for you. But first, Maj, how you doing, man? Everything good?
Yeah, I am good. Did some traveling. I'm back in Florida again, so
we're traveling. Give the people what they're missing at airports nowadays. I'm assuming most people listening to this haven't been traveling either.
Well, no, I was surprised. I mean, I was able to get on the plane with no really COVID, pat down, whatever you want to call it. No questions when I was at the airport about if I had COVID or not, and no temperature taken. It was weird, but but the plane, I had my own seat, which was great. I flew Delta. And then when I landed in Michigan, then there's no kind of protocol there either. So, which I thought was strange because Michigan's pretty they've been pretty tight about COVID and everything. So,
well, and let the people know that you get tested every other week, so it's not that you're not being safe.
Yeah, that's true. They have 2-hour testing out here in Florida now, which is nice.
Yeah, that's for sure. Yeah, I just found out at the urgent care where we are, we're covered, so we can go do the test anytime, and it's find out on the spot. It's nice. But anyways, we digress. So today's theme is, look, we're all tired, we're all spent. We just want this election to be over. We're actually going to cover that a little bit towards the end of this podcast today. We figured, look, we don't talk politics very much on here, but we thought it actually might be interesting from someone who's investing through quite a few elections.
We'll be about 10 seconds. Yeah, that's
exactly. That's why we're saving it for the end. But today's episode, what we're going to be covering is that we're actually going to be doing a case study. Now, if you're listening to this podcast, you have heard about myths, microcap stock myths, and you've heard about all of them. In fact, you've probably experienced a few or stayed away from a few microcaps as a result of that. Maybe something's it's too illiquid, or I don't know, there's something shady over here. They haven't reported in so many years. For any number of reasons. Look, and it's okay. But we thought it would be kind of cool to do a story or a case study where Maj and whole humble brag, or I'll humble brag for him. He did pretty well on this one, and it happened to fit all those myths that you heard about that would probably make you stay away. So with that, Maj, you want to take it away?
Yeah. And by the way, I mean, look, we've discussed some recent podcasts here, some of the success stories that we talked about at GeoInvesting and myself, but I think we should talk about in a future one, maybe soon, some of the mistakes that I made and some bad ones that turned out didn't turn out to be how I would want it to turn out in the end, and that's sometimes a reason why you get frustrated with these nano caps also. So I think that it cuts both ways, of course, but I think bad research in any market cap is going to not result in optimal results anyway. So. But yeah, this is a pretty interesting story here.
Let's take it away on a winner, and with that, I'm gonna hide my screen and go after it.
Yeah, so this one, this is an interesting company called PharmChem. I'll change the OTC. The stock symbol is PCHM, and PharmChem history is pretty interesting. It's changed over time. So today they make this product called a farm check sweat patch, and it's used to detect drugs of abuse, and It's a patch that's put on someone's arm, and I think it lasts about maybe 7 or 10 days, and then they got to come back to a facility or maybe a lab where it's removed and tested. That's usually administered by the courts, for parole or probation type of instances. And it's the story behind it's pretty interesting, because before PharmChem was really aggressively targeting that market, they were a leader they had a lab. They were had a drug testing lab, a business, just like a Quest or a bio lab. I don't know. I forget the name of the company, Bobby, because they got taken over. But it's a typical, drug testing laboratory services. And at some point along the way, the company lost a major customer, which really hurt the company. And I think that was around 2003. So the company went dark in 2003 or 4 it was. At that time, the company was a $30 million company. I think the stock at some point in its history was as high as 13 or 14 bucks. So by the time I came across it, originally I think it was maybe 13 or 14. The stock was maybe 5-6 cents, and it come through on my. I do a lot of momentum screening stocks hitting new highs, with really low share counts. I do a stock screen with low share counts, trading under 1 with revenue, very rudimentary type of screen. See if I could find some interesting stocks under 1 that people are probably ignoring that still have decent capital structure and some revenue. And then I further analyze the company from there to see if they're profitable and what's going on and what have you. So I ended up calling this company, and doing a little research before that. Actually, the company doesn't put any press releases out through any major wires. When I had found it, all they really did was put out maybe an occasional press release on their website here and there about some new contract. But really, they issued annual reports once a year on their website with no press release. You just had to find it. And they usually the annual report was usually covering the year prior. Was usually a lag in terms of, so they're always a year behind in getting their financials out. So you never knew what you were getting at the current time. But what I found interesting was this little 5-cent stock with 6 million outstanding shares had revenue. Maybe 2-3 million in revenue when I first found, or maybe 3 something when I first found it. Profitable, really high margins. Net margins were around 30%. Gross margins, in the 60s. I think it was selling at that time maybe below book, significantly below book, which might have been 30 cents or so. And had a nice cash balance, and the stock was just sitting there and profitable. I think that at that time the stock had maybe a PE of I want to say 2 or something. so I decided I bought this. I bought a little bit of the stock just to have it. And then I called the company up and talked to the CEO, and the CEO was very like, "Hey, I really don't feel like talking to you," and very the conversation was more like, "Hey, you shouldn't buy my stock. Why, the last thing he said to me when I hung up was, our printer's worth more than the stock, more than the company," which was ridiculous because they had some revenue, unless it's a very expensive printer. And I said, well, this guy just didn't want to talk. He was, if you just think, given the history of the company and what happened, he just didn't really feel like dealing with shareholders. Maybe he was a little upset at how the market, punished the stock based on what happened. But what had happened though by the time I found the stock was they basically got rid of all their other business, which was at that time I think urine testing. That's where they were making a lot of their revenue at that time, and they had the sweat patch technology kind of just sitting there that they weren't really marketing. But then when that's all they had left, they had to start marketing the product. So that's the story of how the sweat patch became their primary product. And right away, that type of because I've invested for so long and I have these different scenarios in my head that I've gone through of successful kind of companies. There's a lot of that checked one box where you had this senior management team that's been there for a long time, that was able to salvage some type of hidden asset in the company, and proven that they can get some early success in doing that. And so that really excited me a little bit. So regardless of them saying that the printer was worth more than the company, I bought more of the stock. And it wasn't too long after that where I originally bought the stock around 2013, 14, like I said, and didn't really talk about it at GeoInvesting at all until 2016 when I called the company back again. I think at that time they were doing maybe $4 million in revenue for the year at that time, and still profitable. All the financials looked good. The stock was still around, I think, in that 5, 10, 15 cent area. And the company put out one of its shareholder letters, and in that letter they paid a dividend. Like I think it was a 5-cent dividend. But you got to be kidding me! That stock was trading just around that, and it shot up pretty quickly to maybe 30 cents, 35 cents. Then slowly came back over time again, which was really weird. So I kept buying the stock, and we wrote about it at Geo eventually in December of 2016. Gave a whole historical foundation of what was going on in the company, everything I just talked about now. So this is already like just breaking all the myths, right? I mean, this company is what I call a tier 1 company in the microcap space. We covered that last week, Bobby, in the checklist. And I already had a strong checklist one, had a long operating history of at least 20 years. Well, this company was founded in 1971 and IPO'd in 1991. Strong management team, that was a yes. It's the same management team that was there at the beginning. And, they found a way to take a hidden asset and do something with it. It's still the same man. The CEO is still, that was there then, is still here today. Management focused on the business, not price stock movement, number 3. And obviously they don't put any press releases out until recently. They put them out now, but very lightly. But everything went through shareholder letters on the website. Results, by the way, the financials were audited, I believe. The next characteristic is at or near having revenue. This is a company that definitely generates revenue. As I said, and actually on track now to do a 2020 run rates about 7.58 million. And it is profitable. I think they're also on track maybe to do 20. Is it maybe 40 cents actually, or close to that? High probability turnaround story. They've already proven they can do that. That's the number 6 criteria. Number 7, high insider ownership. Yes, I believe it's over 50%. Manageable debt burden. They have 0 debt. Ability to grow without excessive equity raises. And this is interesting. And 9 and 10 are basically the same. So 9 is ability to grow without excessive equity raises. And number 10 is shares outstanding are not excessive. Well, the company has about 6 million shares outstanding, which is what it's had if you go way back in history. So you can see the company's been very, very tight with its share count, which I love. So is this a really interesting story because you have this really illiquid company that's basically dark, a penny stock that most people would write off. But if you're just an individual investor that's not managing $1 billion fund or $100 million fund, you have a few $1,000s to invest, you can build a position in this like this. And it's even better because everyone's ignoring it. And if you have the right company and the right faith in management, eventually people will find it. The stock today is hit I think over $4 last week, a new high. And what's going on now, which is interesting, is that the company, and this is a testament to good management. So the company found a way to kind of like thrive in the COVID-19 pandemic time here. Now, what happened along the way during COVID-19, a lot of courts and a lot of programs for drug testing kind of we're basically seizing their operations for a little bit because of the social distancing issues, of having of offenders or parolees or probation, those on probation, having to, continually go and visit a clinic. And so there's this high touch kind of scenario there. Well, what I learned is that, PharmChem is like, well, no, we want to keep doing this. So they basically said, they appealed. When I use the word appealed, in a loose sense, not literally, but they proposed a solution saying, wait, our technology of the sweat patch can be a socially distant type of solution. It can be mailed to the individual, the individual can mail it back. So it's very low touch. And they're getting into back in the markets they used to be in years ago. And that urine, so basically their competitive technology will be urine and saliva. And those are the some of those, that business was what ceased during COVID-19. So they were able to take the opportunity and have their sweat patch go in there and steal some of that market share. And they're starting to get some contracts now that they didn't have before in different counties and across the United States, basically taking market share away from the typical urine and saliva companies. So basically, if you look at, they basically, I've talked about maybe 2 or 3 county contracts that they've received recently that were kind of new contracts. What I believe are occurring from this scenario I just talked about. And if you start, and they're $50,000, $100,000 annual contracts, it appears to be, but there's over 3,000 counties in the United States, so you can start seeing if they start really getting some runway on winning some more counties. It's a pretty interesting story here. I mean, the stock is sitting here, with 6 million shares, maybe about a $24 million market cap. So you can see where that could potentially go over time. So this is just a great story where the management just continues to reinvent itself as it moves along. And it really, this is one story where it meets almost every one of these 10 criteria that I talked about. It met it, in 2016, and it still meets today. And management is showing you that the number 2 criteria, strong management, is really being shown in this case study, where the company is continuing to basically, whenever there's diversity, it finds a way to meet that challenge. And when you're dealing with the microcaps and nanocaps, betting on the jockey is really, really important. And this is one of those examples. This was a management team that used to run a larger, a respectable company, with 30, 40 million in revenue. So they proved they can do that, and we'll see if they can get there. But so I just wanted to really talk about that, Bobby, and really as an example of how, if you're an individual investor, you don't have to be buying the big caps all the time. You can surround it with these interesting micro caps. Don't listen to the financial media. Don't listen to a fund manager has $1 billion telling you can't invest in these companies. You can, and you can find great opportunity in these tier 1 companies down here.
What would you say clearly right now are the main myths that you'd say this investment for you debunked when it comes to microcaps? Illiquidity, right? Start. And all microcaps are illiquid. What else would you say?
Like I said, the microcaps don't have strong management teams. I mean, this is a tier 1 management team. It's a big cap management team, probably sitting in a nano-cap company. Mm-hmm. All microcaps are just issue shares and are here for the capital to take money from investors for the capital markets. You could pick a number of them here, right? I mean, really, that an individual investor can't. The illiquidity thing is the one that really irks me, because you'll hear that everywhere, right? And it's actually your advantage as an investor in this space. It's actually why you should be here, because these big larger investors, or those who want to listen to the financial media, are ignoring this space. There's opportunity if you look hard enough. Yeah, there's a lot of fraud. I'm not going to deny that. But it's our job as investors to kind of navigate through that. But when you go through these 10 criteria I've listed here, that's a great kind of way to really, I think, reduce a lot of your risk of entering a fraudulent company,
right?
Or be investing in one, or a hype company. The more of these you can hit, the better, I think. It's just really, it's funny when I hear people, when I'm talking to somebody who does, maybe is playing with, $5,000, $10,000, $20,000. Oh, I heard these are illiquid. I can't do it. It's just, I mean, you can build a position, decent amount of position and with that kind of money in these companies. And I built hundreds of thousands of dollars, positions in these illiquid companies, and they eventually become liquid. That's the whole point. If you're good at what we do, they will become liquid. They're either going to get bought out one day, so you don't got to even worry about it. We've had over 50 companies get bought out in geo-investing. That's your liquidity event, right? Or they go from nano cap to microcap to small to mid, where they just look, they maybe acquire some companies, issue some shares, so liquidity comes out of it, so they become more liquid.
Right.
The only, it's really focused. Really should be. I believe you should be focused on finding great companies and that are going to grow over time, and the rest takes care of itself in terms of liquidity.
What's funny is that one of the myths is that a lot of microcaps are either frauds or they got there's a lot of just puff, not a lot of substance, and yet some of those are companies that put out news or are frequent filers. Here's a case study of a company that's dark. The only reason we have the numbers that we do is because they file an annual letter on their website once a year.
What that shows me, man, what that showed me was that he still cared. So you'll see a lot of these, and that's why the number one, the long operating history is a really important tier one quality also. I think I talked about it last week, is that these just older CEOs have been around for a long time. They have this interesting kind of commitment still to really want to leave this world with a legacy, in a positive way. And it just shows it here again. We just actually profiled a company on Geo, a run to one company, a stock under $1. That's starting to move a little bit, but it was the same thing. It's just been basically, you find these old school companies sitting around that preserve the capital structure, waiting for a catalyst to happen. You're just waiting. And sometimes we find these too early, where you got to sit around for a few years. Sometimes you can find them pretty quickly, because even if there's a catalyst happening right now, announced right now, so many investors want to ignore that because they look at the price of the stock, they see it's a nano cap, and they automatically write it off. That's our opportunity, man. It was an even thing with shorting stocks too. And if I was when we were doing some short selling Geo pretty heavily in 2010 to 14, we were doing a lot of China stocks. We were doing a lot of, pump and dumps. And then I started, going away from the pump and dumps and just looking for, and outside China, maybe looking just for, regular companies that seemed to have some, in the microcap space. They weren't pump and dumps, but they maybe were lower, what I felt would be lower quality because of the way the business plan was structured. And every time we would talk about it, we'd throw it around at Geo and with other people. It's too illiquid. It's I can't build it because whatever the case might be. It's the same thing then too. And a lot, those stocks, a lot of them just fell apart because some of the things we talked about internally, at least, they really didn't publish a lot of them, but worked out. So it's the same thing. Wherever everyone's saying no should be is where you might want to start looking, whether it's long or short. Everyone's trying to, on the short side, everyone's trying to go after the big, billions of dollar, market cap company because they want to take down, they want to be the hero. But there's so many of these smaller capitalized companies, even the microcap, that don't deserve to be public companies. That maybe you won't make a lot of money in them because you can't build a big position and shorten them, but who cares? I mean, it's still good to expose that stuff. And that's always a feeling I had there. And as an individual investor, you can make some money, maybe shorten them, because you don't have to play with the type of money that these bigger guys are playing with.
Right.
And there's some short, I won't mention who they are, but some of them are actually exploiting that very, very profitably. And I really commend them for doing that. Not many, but there's a few of them that I like to follow.
Gotcha. All right. Well, Maj, let's land the plane real quick. Are you still a shareholder in PharmChem?
Yes, I am a shareholder in PharmChem. And, I bought some in the 5-10 cent area. I bought some, 20, 30, 40 cent area. I bought some 80 cents. I bought some, I think, as high as maybe $1.80 or $2. And, interestingly though, too, is there was a point where my average cost, probably still is the case, was covered by the dividends that the company paid. They've paid 41, almost 40 cents in dividends. Another myth, right?
Another myth.
Which is amazing.
Microcaps don't pay dividends. Well,
they're going to keep. I bet they're going to keep paying them. So I'm very, until there's something better to do with the capital, and that might be the case now. I don't know yet, but
it'd be even cooler is if the CEO just didn't even care to talk to you. It's just like, oh, you're a shareholder, cool.
Well, yeah, this guy had that kind of thing. I mean, it took me a while to warm up to him, or him to warm up to me. So I started joking with him. I really don't want to invest in your company. It's a piece of crap, but I want to hear it. What's going on? Give me an update. We're kind of, I would say, we haven't met yet. I'm looking forward to meeting soon, but we're pretty good fun buddies.
Oh, that's good. I like that. And for full disclosure, nor I or SNN are shareholders in PharmChem either. So, or neither. We're not shareholders. Just want to make sure that's clear. How about that? All right. Well, Maj, let's land the plane real quick. And before I do, give us your 10 seconds on the election.
I'm going to wait for it to go. I'll just be silent for 10 seconds. That's what it is.
Oh, it's to be silent?
No. Well, look, I really don't. I've never looked. I've always invested through them. I don't really care too much about who wins or loses. There's probably pros and cons on both sides. But good companies and the market itself will just adapt. There's probably going to be some volatility around it and afterwards, but maybe a reset. I don't know which way it's going to be. When Donald Trump won the last term, that was the first time I paid attention to the election. I got so hyped up in it, and I saw a bunch of stuff, right? Because we thought Hillary was going to win, and then he won, and the market went up. I think it would have went up no matter what, actually. And I left so much money on the table from doing that. I'm so mad at myself for doing that. I was ashamed for doing that. So I know we're having some volatile markets right now around the election. I really don't care. I'm hoping that the market sells off on the election pretty hard, and he's going to go there and buy aggressively. So, and I've already sold some stuff in over the last 6 months or so to kind of be ready for a little bit of that. I am still pretty fully invested though.
There we go. I think that's a good place to end it right there. And so with that, Maj, where can everybody go and find you on social media, Twitter, the whole deal?
That is, you can go to Maj. Support it. Let me try that again, Bobby.
Let's try that again. There you go.
Geoinvesting.com is the website where you can go learn about Geo. We have a free trial there too. We have annual, biannual, and monthly memberships, which I highly encourage you listeners to check out. If you're looking for tier 1 quality companies. And look, man, I just like I said, it's. I know it's tough for people to part with their money, and there's so many sites out there. But really, I mean, we've been doing this now since 2007, and if you're not investing, if you're an investor in this space and not checking out geoinvesting, something wrong with you. I'll go out and be that cocky and say that. But it's obviously there might be there's a lot of these sites out there maybe, but we're not that. And we're actually getting a lot better at what we're doing. And we're getting, each year our quality is getting even better. So I just had to throw that out there.
There you go.
And that's not the last time I'll say that, by the way.
Hey, man, shoot your shot, dude. This is your show. It's all good.
We're really fucking good. I will tell you that right now.
It is.
I'm really proud of what my team's been doing, how they've really navigated through COVID, the years of effort they put into this company. I think they deserve a lot of credit for what they're doing. The membership we built here it's fantastic, getting better, getting sticky, getting long term, because we're doing more of that at Geo. So we got some really big things planned to help investors find these companies themselves. Tools. It's gonna be really fun. Back to where you can find us. So on Twitter, you can find me at Maj Geoinvesting. And then for Geo, it has its own handle at Geoinvesting. It'd be nice, Bobby, if you could put a freaking thing up there so you have to say it every week, like a little note across this freaking screen. Producer.
I put in the description, all right, you want a note? I'll put a note. Put a note up there.
Twitter. I see those guys, press here for the favorite, press here to share and all that stuff. Putting you on the spot now.
You know what? I'll take it. And say that's not a bad. That's not.
Look, you know what? I'm sorry.
We'll get the buttons.
The Giant. I mean, dude, I know you're feeling. I won't.
Look, man.
Tough week.
This is a lost season. I saw a funny tweet today that was like, did you? I don't know if you watched the Seahawks Cardinals game last night, but you saw Metcalf just chase down that guy. They were like, oh, that was the second best chase down to stop a touchdown. The first one is the wind that casually blew over Daniel Jones on his 80-yard run that he tripped over.
That's great, man. Steelers almost gave one away yesterday too. Ooh, that was close.
That was a good game. That was really good. I was flipping back and forth between that one and I had Packers Texans on, and it's just fun to watch Rodgers do his thing. Even if it was a blowout, it's so fun to watch him just carve up defenses like that. And the Texans suck, so it wasn't too much of a stretch. But
which game are you talking about?
It was Packers Texans. We're in different times. We're in different time zones, so I don't have red zone. So I just take whatever they put on TV. So for Fox, we're in LA, they were showing Packers Texans, and then on CBS they were showing Pittsburgh Tennessee. Okay. So I was flipping back and forth between those two. And then here's the worst part in LA, on CBS, the afternoon game, you would want to watch. I even watched Patriots 49ers over the game that they showed. They showed Chargers Jaguars, which actually wasn't the worst game ever, but still, do you want to watch Packers Chargers? I mean, Herbert was fun to watch, but I'd rather. The other game was a blowout too, I guess. I don't know. I kind of wanted to watch the Tampa. I wanted to watch.
You confused what you wanted to watch.
Raiders. Well, it's look, I don't have much of a choice. I'm not. What?
I hope your portfolio was more decisive than that. Your stock portfolio.
How is my portfolio doing? You haven't taken you haven't taken me up on an offer yet that we're hoping to do on the show here soon. But I think you will soon. But I don't know. I didn't even look at the games this week. I did look at one game. Our Monday night game, Giants are playing Tampa. I think either in Tampa or in New York.
Good luck.
The games this week are not very interesting at all. I think the only game that's good to watch, I hope it's on TV out here, is your boys are playing. They're playing Baltimore, so that should be fun.
That's a really good game, yeah.
It's gonna be fun. I can't wait to watch that one. But anyways, you can follow me on Twitter at Bobby K Craft, BOBBYKKRAFT. You can actually click the link right up here. And then you can also click no, I'm just kidding. you can watch the video version of this on youtube.com/SNNWire. You can also listen to the audio version of this wherever you get podcasts. The website for that is avoidingthecrowd.podbean.com. Maj, always a pleasure. And I'll see you next week.
Thank you, Bobby. Bye, everybody.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.